All right, let's talk about inducement. Let's talk about inducement. Okay. So basically, what is inducement? Inducement is when price goes to take out internal liquidity in a range before continuing the trend, right? So that's inducement. Inducement is when price takes out liquidity, but it doesn't necessarily mean that the trend has changed. So it takes out liquidity on the opposite side of the marketplace, but it still continues the trend. Okay. So for example, when price is going up, making higher highs and higher lows, it suddenly makes a lower low, but still continues to continue the pattern of the uptrend by making higher highs. All right. So now look at this chart here. Okay, look at this chart. So we have an uptrend. Okay, we have an uptrend. So we were making higher highs. Then this range retraced here. Started having a retracement here. Okay. So after the retracement, price started moving up to form another range. Price move up to form another range. Price move up to form another range. Okay. But when price now starts retracing here, when price starts retracing here, we are going to what inducement is that we are trying to observe which exact place is going to take liquidity from before we continue going higher. All right. So that is what we are trying to get with this concept. So this concept is not too important like that. Okay. You don't, it's not something like you need and must have, and it's not, or does it always work? Of course, like every other thing. Okay. So, but it is something that might help to have it as a last option or a last piece of confidence when you're trading. All right. So now, before this move up to break market structure up here, okay, before it move on to take market structure here, there was a tiny break of market structure inside here. Okay. So this is where price first of all made the first sign that it wants to start going up. This is where price made the first sign that it will go up. All right. So you can call this thing minor break of structure or minor break of market structure, something like that. Okay. So this is the first strong high in the direction of this downtrend that was broken before price went ahead to take out the main external liquidity. Okay. So now the low that was formed after we took out this uh this first BMS, this MBOS. Okay, the low that was formed after, immediately after we took this out, this low right here. All right, so this low, that is what we call our point of primary inducement. Our point of primary inducement. So if price is coming down, price is retracing. Okay, price is retracing, price will normally come down to this primary inducement to take out the liquidity before we continue. Okay, to normally come down to this primary inducement to take out the liquidity before continuing. All right, so the first low that is formed after the market first shows sign of continuing the trend, that is where we'll call our primary inducement. All right, so that's this level right here is our primary inducement level. This level right here is our primary inducement level. So you keep that in mind. Okay, so this low is our primary inducement level. So price will normally come down, take out that low before continuing. Okay, before continuing. So now this area, this zone right here that I marked out, the zone between this first sign of bullishness. Okay, this first sign of bullishness, this um minor break of market structure here, this place down to the lowest point of the previous range, all right, previous retracement. That is what you call your primary zone. That is what you call your primary zone. That's what you call your primary zone. So you would expect price to do primary inducement inside this primary zone. Okay, so somewhere inside the primary zone, there will be the primary inducement. All right, and then price will now continue higher. So probably you can shift your entry to be like this. Okay, and look for something down here like imbalance, other block, anything that might prove as a a point where price will continue the trend. All right, so that is just basically what we mean by primary inducement and primary zone. Okay, so when you're trading, there are two different zones we look at, either primary zone or secondary zone. So it will react at one of those 2 points. Okay. So now let's look at secondary inducements. Okay. Secondary inducement and secondary zone. So I would delete this. You can draw it in your notes by moving back in this video. All right. So you can draw it in your notes by moving back in this video. So I'll delete this. Oh, that was an error. Um, Select this and delete. All right. So now we're talking about secondary inducement and secondary zone. Okay. So now sometimes you realize that the price doesn't go down to where you to down place. It doesn't go down like that. Okay. So you might have an uptrend. Okay. You have an uptrend and then suddenly it starts retracing. Okay, so it retraces for some time. Okay. And then this one moves up and forms a very big um momentum move here. So it formed an imbalance or something. So there was quick price movement here. So this is when secondary inducement usually happen. Most times, secondary inducement will happen if there is a quick move here. Okay, so we might now have some range structure here. So we now have some moves here. Okay, some moves here, some moves here. Okay, so now um the parts that we are going to secondary inducement when once the trend gets start shifting here, okay, our first target will be secondary inducement, which is the the first low that was formed after price took out external liquidity up here. Okay, so like this. So we expect price to take out all those lows. It might not come down to primary inducement here in this case. Okay, so it will likely take out all these lows before continuing the trend. Okay, before continuing the trend. All right, so our secondary zone will be this area. This area. Okay, so secondary zone is the area where the reversal first started in the corrective phase. So that means this low, when price took that low, we know that the bullish trend has paused for a while and we are having a retracement. Okay, so this area here is our secondary zone. Our secondary zone, and price will likely come into that secondary zone to continue the trend. Sorry about this guy making this noise. All right, so this area is our secondary zone. This area is what we call our secondary zone. All right, so secondary zone is the area where the retracement first started. All right, so where the price first shows sign of going down and then this high. All right, so that is your secondary zone, and our secondary inducement point is the first low that was formed after price took out this external liquidity here. All right, so we might expect this place as our first target for the trend to continue going higher. So we may not expect it to come down to primary inducement, even though in this case as well, it might still come down to primary inducement. Okay, it might still come down to primary inducement, but then our secondary inducement point will be our first area where we will start checking for bullishness. All right. So you don't just go and buy it like that. Okay, you wait for bullishness first. Every time, always wait for confirmation. Always wait for confirmation that the price is going to go in your way. All right. So now this is secondary inducement. So you are going to look for a trade somewhere close to the secondary inducement to buy to the external liquidity. The external liquidity. So this is secondary inducement, and this is how it works. All right. This is secondary inducement, and this is how it works. All right. So now there's some that we call unsupported price swings. Okay. So for example, might have something like this: price trending. Okay, price is trending, price is trending, price is trending, and it retraces for some time, and then it starts making so many higher highs. Okay, very quick movement like this. and it forms so many imbalances like this. So it's not that it's forming a range structure after the high was taken out. It kept on booming like this. All right. So in this case, the market is moving very, very quick. Okay, very, very quick. It's going out to take out something above. Okay, so if you did not buy here, don't look for anything here. All you have to do is wait for this thing to retrace. Okay, so in this case now, the area where I'm going to expect price to come down to if your retracement starts is the primary zone. Okay, so in this case, we expect it to come down to the primary zone. We expect it to come down to the primary zone. So if price should start retracing, for example, price will likely go down to primary inducement before we continue. Okay, so price will most likely reach down into primary inducements, okay, to cover for all these imbalances and inefficiency. Okay, so price will likely go down to the primary inducement before continuing to the upside. Okay, so now this is what we call unsupported price swings. Now everything I've said so far, all you have to do is transpose it opposite. Okay, do it the opposite way for bearishness. So these are bullish conditions. So for bearish conditions, just turn it upside down in your head. Okay, just turn it upside down in your head. All right, so now we want to check out some examples of these things on the chart. All right, so I want to check out some examples of this thing on the chart. Some examples of this thing on chart. All right, so um looking at this this range. Look at this range now. Okay, look at this range. So you can see price going gradually down, going gradually down. Had a quick movement here and started retracing. Right, so as it crossed this external liquidity here, it crossed it slowly. Okay, it didn't make any momentum move. It didn't create an imbalance around this area. So we expect primary inducement in this case. Okay, so um what we have to do is that we have to go inside and observe where the price first of all made a break of market structure. Okay, observe where the price first made a break of market structure. Okay, so that's what we are doing in this case. That's what we are doing in this case. All right, so um I could say that the place where it made the first BMS, so looking at this part of the trend. All right, so we had an upward move here. Okay, we had an upward move here. Okay, upward move here. All right, then it came down, but it doesn't take out anything under here. It doesn't take out anything under here. Came up, came down again. All right, so it has taken this low that was formed there. All right, so this was SMS. Then you can count this as BMS, or you can just say this is the main BMS here. All right, this is the main. You can well, how do I explain this now? When it went up like this, it formed an imbalance here. Okay, so this candle right here mitigated the imbalance, and it went up again, came down and mitigated the previous candle again. So these candles are now strong. So once price should take out those candles, that is our initial sign that the bearishness has continued. Okay, that's our initial sign that the bearishness has continued. So that means that once price takes out the external liquidity by going below this low, so this is the main break of market structure. We look at what was the high that was formed immediately after we took out we did a minor break of structure, which is this high over here. All right, so that high will be our point of primary inducement later on if the trend should come back. Okay, that's our point of primary inducement. Okay, so that means that what we'll be looking for entries is between this top to that primary inducement point. So once price goes above that point, it has induced liquidity. Okay, so this is primary inducement in this case. All right, so um that's basically it. We expect price to reach up in here, look for something that's inside here. Maybe another block, a sponsor candle, a fair value gap fill. Okay, inside this area that would constitute a sell for us, or it might just be a rejection block. All right, might be when price enters all these weeks, so it might do a rejection block there as well. So it could be anything. All right. So this thing I'm teaching right now is not a very very important concept. Okay, but it would be nice if you just learn it and just add it to whatever you're doing. But it's not compulsory, and it doesn't mean that if you don't know this thing or if you don't understand this thing, it would um it will affect your trading. Okay, so I try to understand this. Sometimes it became overcomplicated, so most times I try not to use it. I try to avoid it. I try to take my trades without using this. Okay, but sometimes it's actually helpful. All right, so now we have found out that our zone is from the top of the range to the bottom of the range. All right, so if we take out this high, that means that this trend has changed. Okay, so we can draw it out in time. We can draw it out in time. Okay, and then you can see that price came and just about took out that liquidity. Okay, just about took it out before we continue. All right, so this ability to even take it out. Let me confirm if we took it out. We confirm. We didn't actually take it out though. We just mitigated. We just touched it like equal highs. So I guess that this case is invalid. Okay, so this is one of the reasons why I don't like using this concept. All right, so this case you didn't even do the inducement here. Okay, so probably this was except if we are taking the main BMS to be here, then this will make sense. All right, but let me try and move into the chart and find another example. Okay, let's move into the chart and find another example. All right, so you can see this one now. Okay, this candle this candle broke market structure by not respecting this imbalance. All right, so there's an imbalance here. So normally you should mitigate this other block that's inside this small area here before continuing higher. But it's weak trade, that's a minor break of market structure. Then the first high that is formed will be our inducement point. Okay, our primary inducement point right here. Okay, primary inducement point right here. Okay, right there. Right, so what it is now, take this whole zone and look for something inside there to continue the trend. All right, so this is basically it. um this is basically it, and in this case it kind of works. Okay, even though you can just say this used a rejection block. You can just say this used a rejection block. That is why honestly I avoid this kind of primary inducement, secondary inducement, except in the case that it is so clear. You understand? It's so clear, I can see it, and I believe that according to other things, um other concepts on the chart, maybe an imbalance or something like that, or a rejection block in this case, this primary inducement stuff is going to work. Okay, I don't just use it as the first thing in my strategy. I use it as like a last thing. Okay, sometimes I just ignore it totally. Right, I ignore it entirely. So this is an example of such. Right, this is an example of the primary inducement happening. So after primary inducement, price sells. Okay, price sells after the primary inducement, and it went down to the external liquidity. All right, so let's now I'm trying to find out if we can see. All right, here now you can see this sharp movement that took out the highs. All right, sharp movement that took out the highs. Okay, so now we're going to find our secondary zone. I'm going to find our secondary zone. Our secondary zone is from here to here. All right, so once price start coming down, we might see that this thing will react within this secondary zone. Okay, and this thing is also like a reclaimed block, right? Also like a reclaimed block, also like a reclaimed block. This area up here to down here, also like a reclaimed block. So these two things working together is what we can say can be a reason for us to buy around here and take profit at this high and this high. All right, so This is example of secondary inducement. You probably cannot see the inducement point in this area. You probably cannot see the inducement point, but if you go down to lower time frame, there will be something inside there. Okay, that was induced before price went up. Okay, so this is primary inducement and secondary inducement. So I don't really have time to go and look for unsupported ranges. Unsupported ranges is when it's going like this. Okay, it doesn't support anything, doesn't touch anything like that. All right, doesn't touch here, anything, doesn't touch primary or secondary zone. It just boom. All right, so we must expect price to go all the way into primary inducement before we continue the trend. All right, so price must cover up the whole thing. Okay, so it must come in somewhere to continue the trend. So that's basically it, guys. Let me end this video. I don't know why these people making a hell of noise here. Anyhow, that's all for this video, guys. I will see you on the next one.